recording.
Hey guys, what's going on? This is Mario. Gonna have a little discussion about the FOMC minutes. This will be a shorter discussion. Mostly, it's just kind of some initial thoughts on what was stated in the minutes, and kind of reiterate some views that I have. In the near future, hoping to have a bigger discussion with the team to give some possible predictions for the July FOMC, which will probably be one of the bigger market movers just for the next couple of months, as you have a pause in FOMC meetings after this month, and then they pick it back up in September. So any type of possible market pump or dump could really come from this next couple weeks of events. So some of like the initial things that I saw that I've been stating now for a few days, when it came to inflation and the U.S. dollar, is that the Fed and the U.S. government cannot afford for inflation to run as high as it has been. And I put it in the chat for Donkey Kong's post, is that like when you're in a position of power, you fight for everything to stay in power, and the U.S. dollar is definitely in the position of power when it comes to global currency, and inflation being above 8%, probably anything above 5% is very high, and you run the risk of what they're now really hoping to prevent, which is entrenched inflation. And it's real funny. Like probably like less than a year, we go from transitory inflation, that will not stay around for too long, will not affect the economy at all. And now they are deeply concerned about entrenched inflation, where you have consumer prices and like manufacturing cost of goods, and the consumer being used to the high prices and it just sticking around. And I think when you start discussing like the possibility of inflation remaining this high, uh, you really start to put the U.S. dollar at risk in terms of global dominance. You could really start seeing um, countries debating whether or not the USD is the best backing, the best reserve for their currency. And you've seen some countries who have decided to change, and they've done well for themselves. Um, some of the points that were brought up in the minutes themselves. Um, let's kind of go through some of them. So all participants concurred of wanting to move to a very restrictive stance on policy, and that they recognized that there was a possible need to be even more restrictive. So what does that mean? Well, I think it fully puts 75 basis points on the table for July, um, and that they are going to fight inflation, um, possibly no matter what the risk is to equities themselves, to your stock prices, to your crypto prices. At the end of the day, they have to protect the dollar, and fighting inflation is their best bet for protecting the dollar. Will inflation remain high? Well, if they keep doing cuts, you're already starting to see impacts in other markets. Housing market mortgage rates have kind of paused. I believe I think most economists believe or say that you'll see the initial impacts hit housing first, right? Housing, um, and we're already seeing some of that with some of the mortgage rates and house prices. If we should see a continuing decline there, uh, but some of the areas that we haven't seen really major impacts yet, that I think the Fed will continue to watch for, and as long as the numbers stay low, they won't have a concern of continuing to raise rates. I think that one is probably unemployment rates, which are like very, very low if you think about it. I think it even said within the minutes themselves, I have it pulled up, that participants noted that the demand for labor continued to outstrip available supply across many parts of the economy. That various indicators pointed to a very tight labor market. These indicators included an employment rate near a 50-year low, job vacancies at historical highs, and that there was elevated nominal wage growth. Um, let's see here. Employment growth, while moderating somewhat from its pace earlier in the year, remained robust. Um, and let's see here. And then I think those are some probably the major points. A couple participants raised the possibility that tight labor markets would spur investment in automation by firms, boosting labor productivity. Um, I think one thing that we need to watch for is this quarter's GDP growth. You had the Atlanta Fed now, GDP now, come out with a negative 2.1% growth for Q2, which is kind of like a real time look at GDP growth for the quarter that you're in, and they update it. It's like every 3 days, and then they'll do every day towards the end of the week. The next one is coming up in a couple of days, if I'm not mistaken. I think maybe Friday. Um, they're predicting negative growth, while the Fed believes that they are seeing slight increasing growth for Q2. But one thing that I've noticed, I looked at the GDP now, is that when it comes to their forecast and air, um, so negative 2.1% or better in order to not have consecutive um, negative growth quarters. And the forecast, it would have, the GDP would have to do something that it's never done before, which is best it by over 2.1% in order to not have that negative growth quarter. So I think that's really interesting. That while they keep pointing to what they believe is indicators suggesting that real GDP growth was expanding in the current quarter, with consumption spending remaining strong. Um, they're under the impression that I think they really believe that real GDP growth is going to be positive for this quarter. That could be one negative thing that comes out is if they keep kind of forecasting positive GDP growth and it does come in negative, even if it's just slightly negative, that could be extremely negative on markets themselves, market prices. Um, let's see what else here. Inflation remaining well above the committee's objective. Again, moving to a more restrictive stance of policy. To promote maximum employment and price stability. So again, one, probably going to move to continue to fight inflation as long as unemployment stays low, which it is very low. Let me see. So it's about 12 pages long. I do recommend you go through. There's a lot of good information in there. A lot of it is kind of advanced too. Some of it I still have to I research. Um, there was a space today on Twitter by Unusual Whales Twitter account. I don't know if anyone follows them. I recommend going in and listening to that. I caught maybe like 10 minutes at the very end. They had some economists on there discussing um, interest rates and those being priced into the market, and how long certain factors take before they are fully priced in, before you start seeing those effects. I'm going to listen to the whole thing. I think it was like 2 hours long though. So it probably is going to be a little bit of a listen, but I think it's actually be very beneficial. If you guys could take the time to listen to it a little bit, then maybe we could have a discussion later on regarding some of the points that they bring up there in that talk. Um, Other things that I'm looking at is you have yields. Is like yields and bonds, right? Also the overnight reverse repos that were mentioned within the minutes staying extremely high right now. It's it's like almost a 2% rate for overnight repos, and it's still in the trillions of dollars, which is a very high number if you compare it to um, handful of months ago. And it's continued to grow. Very short term, low risk, and the demand is extremely strong right now. I think last night's it had like some 950, 960 bidders for overnight repos that they awarded. And looking at some other things. Let's see. I think prior to these minutes and the kind of, I don't know, Hogo, I think you're in chat. If you would agree, they came out like pretty hawkish when it comes to fighting inflation. I think that you saw um, before these minutes came out, though. I think what you saw was the market trying to price in the possibility of rate cuts happening sooner than anticipated. And uh, Hogo mentioned it that September likelihood of a rate hike increased where it had been decreasing. And I think even towards the end of this year, the beginning of next year, they actually started predicting rate cuts. I think that's what you're seeing currently in equities, in yields, is that you are seeing the market try to price in the possibility of a more dovish Fed either in the minutes or at this July FOMC. Um, and they did predict rate cuts for the next year at least. Yep, exactly. And I believe like if CPI comes in still like 8%, um, even if even I don't even know what's the forecast right now for CPI. Hold on one second. It is. Hogo, do you know what the rate forecast is? Um,
Uh, the odds of 75% basis hike in September went from 3% to 16% today.
yeah, I was trying to see what they are thinking inflation and CPI, core PPI would be. I think anything over 8%, even if it stays there, maybe even doesn't beat. That number is just, if it stays that high, you're just going to see a continuing trend, I think, for the Fed, which is to employ rate hikes. Now, does that mean 75 basis points for July, September, and then what is it, November for meetings? I don't, I don't think so. I do believe they probably will back off at some point to probably a 50 basis points if July remains 75, and potentially even 25 basis points. But it really depends on what they're seeing in terms of. Um, I think GDP growth would be one factor. Unemployment would be another factor. These earnings are going to be a huge factor. Um, these earnings are going to be really big. I think what Yoshi pointed out earlier in terms of the volatility for the next couple of weeks is going to be extreme. Once these second quarter earnings start coming out, and because you've already seen it, been a lot of estimates that have been adjusted or decreased. Um, comp- companies are there are going to be companies that struggle. You will have companies that beat. because some companies just naturally do very well. They have a good business model. But you will have some of these bigger companies that either that more likely don't beat. Yeah, Amazon halting, Tesla stopping a factory in China. Um, I gotta do some more research in some companies. Yeah, 2 plants on pause. Um, is right now I would personally I'm fading any type of increase in equity or cryptocurrency prices. I posted last night on Twitter that where we're like it hasn't broken the 1 hour 50 fibs for a while now, and it keeps pulling back into like the 50 75 fib hour 1 hour kind of institutional discount zone. Um, I would be seriously looking for shorts. All my prices that I'm looking at heavily for Bitcoin is one in this current area, especially with volume dropping, and then all the way up to 21, about 21.6, in that range. That major zone rejected back at the very end of June, because that's the 1 hour 75 fib on my charts, which is for my teachings is supposed to be kind of like the ideal discount zone where you look for an extremely explosive move, and with the trend being down, that move would be down in my opinion. Do I know if we have enough time to get to that level prior to like this month's activities and festivities kick off? I really don't know, because it's just kind of jam packed for the next couple weeks. At least one thing per week, which could really impact price. Um, and then earnings start mid this month, or they start like earnings really kind of kick off mid this month. Um, so my take is I think they came out kind of like overly hawkish. Um, Things to like watch for in the future. I was talking with Yoshi and Bowser is that I think what I'm looking at maybe an opportunity for increase in price to play would be after this FOMC, where you have a kind of 2 month period without a rate hike, and it gives the opportunity for them to kind of maybe pump some liquidity back into the market um, before September's meeting. So that'd be one thing that I'm going to watch is for a bottom post this FOMC meeting that leads to a more extended rally. Any rally, then I'm still more likely looking for shorts, and I don't know, some things would seriously need to change. But as long as trend remains the same, any rally, either building or waiting till I reach a discount range that I believe is suited to start building on a short. So it's kind of some of my initial thoughts. I need to read a little bit more of the FOMC minutes. I went through really quick trying to find the key points. It is like 12 pages. Um, Anybody have any questions? Any thoughts? Actually, I'm just curious what everyone else thinks.
Um, well, like you said, there's no rate hike in August, right? So so maybe you think maybe late July, August is you could that
I would.
potential rally.
I think August. Yeah. It. I think the past two FOMC meetings, you've had Bitcoin do like 18% negative,
Yeah.
uh, at least. Um, and I've seen some sentiment that investors don't that possibly that it could beat uh, could best those drops. I mean, in terms of like not being able to that won't drop as near as much, right?
Yeah.
That's in like Bitcoin options volatility.
Hmm.
That I was reading a post on one of the accounts I follow that it currently seems that buyers of Bitcoin options, or at least Bitcoin itself, doesn't seem to be pricing in as much um,
As everything
bearish
else.
sentiment into their options,
Yeah.
where it could be. They said it could be a possible play to watch. Um, so it was kind of interesting. One thing that I saw, I would say probably like August definitely.
Okay.
Um, August would be the month that I'm watching after whatever if we do get a drop after this FOMC, which I can't imagine that we don't.
Mhm. Definitely. Very nice. All right. Well,
Does anybody have anything to say?
anybody else?
I don't like just talking myself.
Mhm.
Me and Donkey Kong are gonna do a talk
Yeah.
in a day or two,
Okay.
bounce some ideas around.
All right. So,
I think trying to be prepared is best. Um, no one. Is anyone else talking?
I'm saying you can't hear me.
Yeah, I hear you.
All right. Well, nobody else wants to say anything.
Guys. All right, well, it's
That's it for now.
yeah, I think that's it. Yeah. Well, like I said, we'll have another discussion here soon. Again, recommend unusual whales. I'll post the Twitter here in chat and try to find that the space that I was talking about and give it a listen because I know I'm going to. I caught the very end. I happened to see it on my thread and I think it's something that could give some good information. So once I find the damn thing, I will post it in chat. But yeah, that's about all I have I think for tonight.
All right. Thank you.